And there's a term for it. I'll give you the acronym and then I'll tell you the term. So and I'm sure you're familiar because you work in real estate, but it's DSCR. It's your
Mm-hmm.
debt service coverage ratio. The
Yeah.
debt has to be serviced. What is the debt? The debt is the loan. The debt has to be serviced. What is the debt going to be serviced with? Either the profits from your business, so that's your regular debt service ratio, or if you're in real estate, they still call it DSCR because guess what? The building or the home or the property that you purchase, they can look at that property and say, hey, for this property, it should still be able to generate this amount of
Mm-hmm.
money per month. So that's like a low doc loan, but it's low doc because they can look at the value of the property. They can look at, the comparisons and say, okay, hey, for this home, they should be able to rent this home out for $3,000 a month. So yes, I can give you a loan where the payment is $2,200 a month because
Mm-hmm.
I can see already that you should still be able to service the debt with the 3,000 that this property can generate. Now, going back to the point about still keeping your personal job, we also have another term. It's called a global debt service ratio. So with the global debt service ratio, debt service is just looking at your business or the property, what the property can generate, what your business can generate. When we look at global, that means what all do you have going on? So think about the globe. It's everything, right? What all do you have going on? So that global ratio gives you the opportunity to either add in another business. You can add in, I mean, it can be Social Security. It can be your W-2 job. It can be your commissions from your real estate sales because you should have a Schedule C. And all
Mm-hmm.
of that should be reported on your tax return. That's the next thing we need to talk about.
Yeah.
Um, but that's the global. The global can say, okay, hey, maybe right now the business would run a little bit short. But when I look at the historicals of this person having this job, the additional income that would bring to the table may be the thing that will actually put you right over the edge to actually get approved. Okay. So those are the things. DSCR, your debt service ratio. The debt has to be serviced. It's serviced through the cash flow that your business or the property produces. The global looks at everything. You may have 2 or 3 LLCs. You may have 2 or 3 Schedule Cs on your tax returns. You may have a W-2 job. You may be getting alimony, child support. It's lots of different categories that can go in there, but it's something that does need to be consistent, and it's something that you do need to be able to prove in black and white. Okay. But
Listen.
then sometimes I have clients where they Uber. I've had people who are doing startups, but they're Ubering. I have people that are starting companies that are adjacent to what they're doing. So you may be a teacher and you say, okay, I want to start a tutoring company where you're going to keep your teaching job,
Mm-hmm.
but that teaching job is a W-2 income, but that can roll into you helping to build out whatever you need to do for your tutoring company. So think about layering everything. But the other
Mm-hmm.
thing that it does is it actually takes some of the pressure off of you. You don't want your business to be in survival mode.
That's
That's what
good.
Tabitha Brown was talking about.
Mm-hmm.
You're going to start a business, okay, and then what? Don't put yourself, don't jump out again, this may be a Southern reference, the frying pan. I don't know, from this to the that, okay? You know what I'm talking about. You have to start. Again, really what this is also forecasting. This is vision. So
Mm-hmm.
going back to what your friend said, some people are planning for the next 100 years. As a business owner, you have to be looking at it at least the next 3 to 5 years, even 10 years. Okay, what are the things I can do now to bridge me over, to get to my break even point, to where I can really start seeing the profit? You may have a family. Even if you don't have a family, you still have to take care of yourself. So how can I still make sure that I can live decently, comfortably, and run my business? Well, again, sometimes having additional income is the only way to do that. It doesn't mean you have to do it forever. It
Mm-hmm.
doesn't mean that what you created is not a great product, but you still have to create some runway so that you can get there.
Awesome. So what do you say to those beautiful Instagram and social media people on TikTok saying you can go get you 50,000. All you need is to go register that LLC. That's all you gotta do. You don't need no documents. You don't need look, we gonna tell you what you need to put on the paper. We'll
That is
tell
true.
you what
Mhm.
to put on the paper to get approved. That's it. What
I
do you
mean,
say to
they're going to
those?
tell you. And you have to understand, like, again, number one, if somebody tells you to get an EIN number and an LLC and go out there and start applying for capital, The only way that that is going to work, not going to say it's completely impossible. The only thing you may be able to get is a business credit card. But that business credit card is going to be based on your personal credit. So that's the missing piece that they're not telling you.
Mm-hmm.
You're not going to get those business credit cards unless you have strong personal credit. So if you have average personal credit, they're not going to really extend you anything. Now, to add to that, if it's a credit card, that means it has a high interest rate. Okay.
Mm-hmm.
We already know that. You may get a low introductory rate for 3 to 6 months or a year, or whatever the case may be. But we know at some point in time that APR will increase. So
Mm-hmm.
why would you take out money with a high APR just because it sounds good? So, and
Mm-hmm.
that's only if you're able to do that. That is what that play is. But that's strongly based on you having, again, strong personal credit, not limited, not average, strong personal credit. What does that mean? That means you really already have to have high limit credit cards on your personal credit
Mm-hmm.
portfolio. If you don't already have a $25,000 personal credit card, trust me, having an EIN number and an LLC and then going to apply to Chase, you're going to get one of those adverse reaction, adverse credit letters in the mail or in your email. So understanding that. So the other thing is that I know I've heard it. The EIN number, this is all that you have to do. No, it is not. You still need a business plan. You still need some direction. Now, back in the day, the business plans used to be super thick. It doesn't
Mm-hmm.
have to be a dissertation, but a lender, an underwriter, their job is totally to assess risk and to limit the risk. The underwriter is almost like the defensive line for a bank.
Mm-hmm.
They're looking to say, okay, hey, we don't need to make that, we don't need to extend credit here because look at the credit portfolio, look at the capacity to repay. So we're going to pass on that. They're trying to defend the bank's assets. The bank is lending you cash, but that cash is their assets. So their job as an underwriter is to defend that. Also, keep in mind that, you know, if you have any type of job, you have a performance review, right? An underwriter's performance review is based on what? How many loans are performing well and how many loans are not. So why am I going to put my personal job on the line when I can't see in black and white that you have the capacity, the character, the five, we've all heard of the 5 C's, but that's what they're looking at, right? So we have to understand that just because you have an EIN number and LLC, you have to demonstrate that you have a plan. Also, even if you're in like a startup or you have a business, they even still want to see your resume. Like, have you
They
been in
will.
this industry before?
And
Are
real
you trying
quick,
to?
I'm
Okay,
sorry, for the 5 C's, for those who don't know what those 5 C's are, can you break those down for me?
credit,